Hello and welcome. You're watching the Global Reset here on CNBC-TV18 Prime with me, Prashant Nair. Joining us today on the Global Reset is Kunal Desai of GIB Asset Management. GIB Asset Management has assets under management of around $11 billion or so. Kunal is co-portfolio manager for global emerging market equities there. He's over 10 years of experience in investing in emerging markets and frontier markets, having most recently been a partner at Mobius Capital Partners. Prior to Mobius Capital Partners, he was the lead manager at Neptune India Fund as head of Indian equities. In fact, he's also served as a portfolio manager on the Neptune Global Emerging Markets Fund. That conversation with Kunal coming up in just a bit from now. But as always, before we take it to the guest for the day, a quick read-through of all the updates overnight. U.S. Treasury Secretary Scott Bessent described India as a bit recalcitrant through trade talks. His remarks follow U.S. President Trump's recent announcement to impose an additional 25% tariff on Indian imports, targeting India's oil purchases from Russia. In a television interview to Fox Network, Bessent said that the Trump administration is aiming to wrap up the trade negotiations by the end of October this year. He said, and I quote, "That's aspirational, but I think we're in a good position," end of quote. While he did not elaborate on the sticking points with New Delhi, Bessent in fact acknowledged that talks with India have been more difficult versus other partners, other countries. Among other things, the U.S. Treasury Secretary also suggested to the interviewer that the Federal Reserve ought to be more open to a 50 basis point cut in the benchmark rate of interest in the month of September. Remember, they skipped a move in the last meeting. He also highlighted how 2 days after the Fed left rates unchanged on the 30th of July, revised data showed weaker job growth for May and June than official figures had previously indicated. He in fact also said that the central bank could have cut rates back in June and July if it had the revised figures in hand. Remember, the comments follow U.S. inflation print, which rose 0.2% for the month of July, while core number was up 0.3%, largely in line with expectations of the market. Inflation numbers in the U.S. have been benign so far. Bessent also stated that he was hopeful that Trump's pick for the currently open position of the Fed board, Stephen Miran, will be in place in time for the September policy meeting. Well, among other notable updates, U.S. President Trump's nominee to lead the BLS, the Bureau of Labor Statistics, is suggesting that the agency suspend its monthly jobs report. This is the NFP, the Non-Farm Payrolls Report, which comes out once a month. It's an economic staple that is relied upon by Federal Reserve, U.S. government, U.S. businesses to gauge the health of the U.S. economy. In a televised chat, the nominee criticized the monthly employment report as flawed and suggested it be replaced with more accurate, though less timely, quarterly data. We don't know if actually, this proposal will come to pass in terms of the monthly NFP data release being cancelled. But this is something which the markets took note of. The dollar, remember, the broader index last night was sharply lower on the back of course, the benign inflation number, but also this comment coming in from the new the person nominated to lead the BLS. The other big headline, European leaders are planning talks with Ukrainian President Zelensky and Trump 2 days before Trump is set to meet Russia's Vladimir Putin in Alaska to discuss the Ukraine war. German Chancellor Merz has invited the French, British and other European leaders and EU and NATO chiefs to the virtual talks amid fears across Europe that any deal made without Ukraine could force an unacceptable compromise between both countries. What's on the agenda for the virtual meeting? According to Merz's office, leaders are set to discuss further options to exert pressure on Russia and prepare for possible peace negotiations and related issues of territorial claims and security. The French President's office also said he and the UK Prime Minister Starmer were also involved in planning this meeting of the coalition of the willing. Meanwhile, Trump was heard playing down the possibility of a breakthrough in Alaska, that is this Friday, but he said he was anticipating constructive conversations with President Putin when he meets him later this week. Now, as diplomatic efforts persist to end the Kremlin's war on its western neighbor, what's left to see whether the said efforts made by European allies mark a significant step towards a lasting peace agreement. Well, that is all the global stuff, right? Here back home in India, Friday, of course, is important because of that summit in Alaska, Russian President Putin and U.S. President, Donald Trump. But it's also important because all eyes are upon Prime Minister Narendra Modi's Independence Day speech as well. It assumes added importance because there has been lots of calls from the industry, from economists, from policy watchers that in the face of deteriorating US-India relations, this is the moment to unleash another wave of reforms. My colleague Parikshit Luthra is now joining in with what he's picking up from his sources with regards to what could be the focus in the Prime Minister's speech. Parikshit, take it away.
Prime Minister Modi's 15th August speech may lay out the next phase of India's self-reliance push and Atmanirbhar Bharat program. Sources say the Prime Minister may emphasize on the need to double down on self-reliance and India's commitment to economic reforms, including ease of doing business, ease of living and ease of taxation. In the current geopolitical environment, the government has been considering ways to increase self-reliance in domestic manufacturing while taking advantage of global value chains where India is not yet competitive. The government is exploring ways to ensure supply chains of critical components are not dependent on any one country. The Prime Minister is likely to acknowledge the role of MSMEs as the backbone of Indian economy and reassure them of government support amidst geopolitical headwinds. Another theme for the Prime Minister may be about the strength and resilience of the Indian democracy. Prime Minister Modi is likely to reiterate India's commitment to farmers and agriculture and emphasize that the country will not compromise on their core interests. In the backdrop of geopolitical uncertainty, the government is expected to work more towards greater export diversification and diversification of energy imports for national security. And this theme may also figure in the Prime Minister's speech.
Parikshit, thank you very much for that. That's a closely watched speech, especially this time. It's always closely watched, but this time more than ever because of the circumstances that we find ourselves in. Kunal Desai is Portfolio Manager, Emerging Markets at GIB Asset Management. Kunal, good to have you on the program here. Thank you for your time. As an asset manager, Kunal, how are you seeing all this? The feeling is that this will get resolved. I mean, I'm talking about India, US. We don't know when. In this 20-day period, will it take longer? 50% can't be permanent, of course. What is your view, Kunal?
Yes, I think, the way in which Trump typically operates is escalating to then de-escalate. And I think the playbook's been in place for a number of months now, where markets have really shrugged off some of the initial news flow that you get, simply because when they talk about a window of opportunity, that's exactly it. It's an opportunity for negotiation to take place and for an agreement to be reached. I think the first thing from our perspective that's been interesting is the lack of a market reaction really to these headline numbers. So, you've had it on the show before, but the sensitivity that India has to US exports, in particular in goods, in particular where the domestic impact is high, is pretty marginal. So we would expect that at 25 basis points, the impact would only be about a 25 to 30 basis points impact on growth. So I'd say the initial impact is likely manageable. Obviously, if it moves to the 50% number, that will stimulate or incentivize import substitution from a US perspective, which could have about an 80% or 80 basis points impact on Indian domestic growth. What I think is most interesting is the narrative that we'll see over the next 2 weeks or so, in particular, the way in which both negotiators from the US and the Indian perspective will likely climb down and reduce the noise and reduce some of the tension. But we'd expect actually from a global allocators perspective, this is potentially a very attractive buying opportunity for the Indian market.
Kunal, with regards to India, I mean, is India part of the portfolio at GIB?
We do. We have about 20% of the portfolio allocated towards India. As I said, if we see market weakness on account of this tariffs news flow, that would be a really interesting opportunity to add further to the Indian market. I think there are 3 or 4 things to really think about. Firstly, foreign ownership is still kind of hovering around decadal lows, about 17-18% of market cap. You've had the valuation premium of India relative to Asia reduce from about 95% in 2022 down to about 50%. The earnings cycle has disappointed in the shorter term, but we would expect over the next 2 to 3 years a 17% CAGR which when you compare it to other pockets of emerging markets still looks very favorable. And finally, you've got this domestic equity participation story, which only gets stronger. So as I said, India typically moves from irrational exuberance to excessive pessimism. And we would argue, though, if we continue to see kind of downbeat feeling because of this tariff expectation, this would be a really attractive opportunity to introduce and increase our exposure towards the Indian market.
What kind of drawdown would make it attractive?
Well, I think it's in the context of relative opportunities. When you think about India's story over the last 8 or 9 years, it's outperformed emerging markets quite considerably. One talks about the potentially sunsetting of US exceptionalism, and India has really been the exceptional market from an emerging market context. So the story for this year, why India has perhaps not been as strong relative to other pockets of emerging markets, has been because other emerging markets have really performed and improved their relative standing, certainly where they were 8 years ago. You can talk about China, you can talk about Brazil, you can talk about Korea, Taiwan. Each of them have their own individual idiosyncratic stories this year. However, the longest term story, the more scalable opportunity within the emerging market context remains India. So if we do see a 5 to 7% drawdown, I think that will be an increasingly attractive point to be able to reallocate some of these more tactical opportunities we've seen in emerging markets towards the most scalable and secular investment opportunity globally, of which India really does dominate.
Kunal, allow me to put some data up for our viewers, right?
Yeah.
And I want to ask you this question because I know you have views on AI and the spending which is going to go into AI, et cetera, as well. So this is something that I it's not something new. I'm just putting out facts and basically just asking the question, just food for thought. If we can pull the data up. So the question simply put is this: the biggest theme, as you talk about secular kind of growth and big growth, the most secular kind of theme right now seems to be artificial intelligence, right? Exposure to AI. Just for context, NVIDIA is about 8% of the S&P 500 now. I'm just using that figure. It's the highest ever, by the way. I mean, no single stock has had that high a weight in the S&P 500, a single name going back to 1981. There were periods when Microsoft was pretty high, Apple back in 2023, IBM at one point, et cetera, et cetera. But this is the highest ever. And the reason I'm putting that out is essentially because NVIDIA is a core AI theme. So the question is the lack of AI themes, AI plays, AI stocks, core AI stocks, and I'm not talking about the IT services companies here, or other companies which may be using AI to bring more efficiency about in their operations, in their businesses, but basically companies essentially which are able to sell AI services, AI products, hardware, software, whatever. A lack of those kind of opportunities hampering the market as well. In the case of US, for example, it's only, I'm just sort of half joking, but it's basically been 5-7 stocks, right, Kunal, which are responsible for bulk of the gains recently. Would you, how would you answer that, Kunal? The lack of these sort of AI exposure as a foreign investor in India, does that hurt?
So I'd say one of the most compelling secular themes to invest in globally over the last 2.5 years has been artificial intelligence. And it's not just artificial intelligence, it's the evolution of artificial intelligence towards artificial general intelligence, which is where the market is essentially looking forward. So typically over the last 2 to 3 years, you've had that story be essentially evolving from infrastructure, which is essentially the compute capacity that has been generated globally. So when you think about hyperscaler capex or cloud capex in the US, and a number of the supply chain vendors who are essentially allowing that compute capacity to grow, that's really been focused within the Taiwanese and the Korean market. When you think beyond that, essentially now the value has really moved up the stack and it's moving towards the application layer. So these are companies that can benefit from the cost of compute, the cost of reasoning, the cost of inference tending to zero. And these are the businesses which can generate significant economic value through the productivity gain that they can achieve. Now, the bulk of these companies are focused in China, they're focused in Brazil, whereas India has really not benefited from this, simply because the IT services are being perceived as companies that could be potentially disrupted by the wave of artificial intelligence. Now, just to give you some numbers, when you think about the capex that's being built, there's an expectation over the next 5 years for about $1.1 trillion of capex to be built by the US hyperscalers. So when you think of Google, when you think of Amazon, when you think of Meta. But when we layer on top of that, what sovereigns are likely to spend, what AI native cloud companies are likely to spend, what physical AI will likely amount to, we'd expect another 900 billion on top of that 1.1 trillion of capex over the next 5 years. So really, this is a $2 trillion opportunity, which we'll expect in the medium term. Now, this creates significant opportunities for those businesses which are providing optionality at the core bottlenecks of that growth. So when you think about Taiwan, when you think about Korea, which are the leaders, both in logic and memory, these are the big enablers of that capex story to come. Now, what's held India back has been, as you rightly mentioned, that there haven't been these pure play opportunities for this capex, this infrastructure build. And secondly, the derivative of this is the application layer, the productivity gains, has really been focused on some of the software companies, which are clear data set, which really resides in China and other parts of the world. Now, I think what will be interesting over the next 2 to 3 years will be IT services. And there will be clear winners and losers, companies that will essentially have their models holistically disrupted, and also companies which can see essentially this productivity gain, which can drive higher incremental margins and free cash flow. So that's really the conversation that we're having about within India, which are the winners, which are the losers from this AI perspective, in particular within the IT services subsegment.
Okay, so in India, it'll be IT services, but not all. And, let's just take a quick break here, Kunal. I'm going to come back, continue this conversation with you on the other side. I will sort of ask you maybe if you can tell us about the companies which you think are well placed to benefit from this AI revolution here in India within the IT services space. Take a break. Be right back. Okay, welcome back. We're in conversation with Kunal Desai, Portfolio Manager, Emerging Markets at GIB Asset Management. Kunal, of course, believes that AI as a theme is going to be a big one. It's going to suck in some $2 trillion in total of investment combined over the next couple of years. So, I mean, this is a space where there'll be big winners. There have already been very large winners. Kunal, so we were talking about India, right, in the context of what it offers up as a theme. So, you mentioned winners within IT services. You want to tell us which ones you think? And you already own them.
Yeah, so I think the market's still trying to gauge what it will likely be. One point or one kind of case point would be how companies price. Do you price through time and material, the number of hours that a particular analyst is working on a project? Do you have fixed pricing? Do you price by the amount of tokens that are generated for essentially those products or those solutions to be offered? So there's a huge amount that's up for debate where I think we're still analyzing what the likely 3, 4, 5-year story will be. But one area I would like to highlight, which I think sometimes gets ignored within India, is the engineering R&D part of the market. So businesses like L&T Tech Services, businesses like KPIT, businesses like Cyient are all based on essentially providing outsourced engineering, research and development for some of the large industrial houses globally, both in Europe and the US. Now, one of the most interesting themes we see is physical AI. At the moment, everyone is really thinking about language models, so pre-training on essentially all the language that exists, which creates an opportunity for generative AI. But I think where we're looking forward towards, and this is really where the Taiwanese are very much focusing on, is thinking about pre-training on physical data. So essentially the integration of AI models into real world systems like robotics, like vehicles, edge devices and manufacturing. And this unlocks a huge amount of potential and demand for new classes of hardware, for sensors, for compute platforms, for edge inference capability, which really works neatly along some of these outsourced engineering companies, such as the companies I mentioned. Now, at the moment, these companies typically trade at sharp discounts to their IT services cousins. However, we think that this potentially segment can be interesting. It's probably less disruptable from a generative AI perspective. And the amount of spending that industrial houses will be making on introducing their own physical AI systems will essentially mean that the addressable markets of these businesses can accelerate. So that's one pocket where we think could be interesting, and again, benefits from the valuation discount versus some of the IT majors where the market typically focuses.
Some of these are at a premium, Kunal, compared to the larger IT services companies, depending on what numbers you take. But some of the names that you mentioned, they're really. But by the way, physical AI, sort of AI. When you talk about it, you talk about things like robotics, etc.
Yep, so it would be robotics. So, you mentioned the valuation. Science, for example, is trading at 14, 15 times earnings. It's had its own issues.
Yeah.
We believe that if some of the self-help stories come through on top of their addressable market beginning to accelerate, this is a business that in particular could re-rate to some of the more premium valuations of the market leaders in that space. So there is value in that space, which I think can be unlocked, both from the addressable market, both from essentially the CapEx obligations that their customers will have, and also their capability. Within the market itself, I think when you look at the mid-cap space in particular, we expect there to be quite a bit of consolidation taking place as well. So that would be another lever of interesting kind of investment opportunities as consolidation within this typically very fragmented system essentially accelerates. So that's where that market repair story can come through. And as I said, this is a positive kind of externality from the natural winners and losers evolution that we expect in this space.
Kunal, and do flag potential US equity outflows. You say foreign holdings revert to pre-pandemic levels. I mean, that's a very large number. What will trigger it? This last 3-4 months, we've been talking about US exceptionalism fading, but it's not really fading, is it? Because maybe it is, who knows? But at the margin, it's not showing because of AI exceptionalism, I guess. And the center of AI is very much in the US. So it doesn't matter at the margin if there are some outflows, as long as these 5-7 companies do what they're doing.
Yeah, so when you look at the dollar, for example, the dollar up to the first half of the year had one of the weakest starts for 6 months since the 1970s. So there has been an impact from a currency perspective. And from an equity market, as you rightly pointed out, the recovery has been sharp, but this has really been driven by the tech story, and in particular, the commentary we had this quarter from some of the US hyperscalers in terms of their CapEx obligations. I would say that we wouldn't expect a collapse in US exceptionalism, but there's probably a shift in the relative opportunity, and in particular, the level of crowding that we see from an investor perception. I think what would drive this or accelerate this would be a continuation in the weakening of the institutional pillars. If you continue to get attacks on central bank independence, this can have an impact, particularly on currency markets, which can then feed into equity and fixed income capital. Diminishing soft power, potentially inability to add labor capital to improve their own productivity story. So these are all kind of catalysts which we're aware of, which essentially could mean we reach the sunsetting rather than the collapse of US exceptionalism. In terms of how investors are positioned, when you look at global investors and the allocations towards the US over the last 10 years, the ownership in the US is typically towards a 65th to 70th percentile. Now, when you compare that towards emerging markets, and in particular China, it's lower than the 10th percentile. So the ownership levels of emerging markets and China relative to the ownership levels of the US remains incredibly split. It remains incredibly bifurcated, which creates this relative flow opportunity, which we would anticipate to continue over the course of the next 18 months to 2 years. Now, emerging markets need to do more than just be a cheap asset class. They need to be more than essentially just being under-owned. Really, for us, what will matter most is the degree to which return on equity, earnings revisions outstrips what we see in the developed markets. That's why the cost of capital and inflation falling in major emerging markets matters. That's why this AI story, which is now deepening and diversifying away from the US towards these core bottlenecks in Korea, in Taiwan, and in particular in China, matter from an emerging market context, because essentially you can play these same secular themes at lower valuations within a number of key emerging markets.
Absolutely. Kunal, a great conversation, and I think gives a broader sense of what a sort of a global fund like yours is doing at a time of so much flux and uncertainty. We had more questions, but we're out of time, so we'll invite you back on this program. Thank you very much for joining us today, though.
Pleasure. Thank you. Nice to talk to you.
Thank you. Well, it's a wrap on this edition of the Global Reset. Thank you very much for staying with us. More coming up after a quick commercial break.